Hello, once again, I'm BR Schultz, SP500. It is Sunday, the Sabbath, July 20th, 2025, and I believe that we achieved the peak in markets on Friday. It's a rough estimate, right? Plus or minus one business day, roughly, or day and a half, whatever. I'm using more high-scale models, so it could be a day and a half either way, but I believe that we saw the peak on July 18th as prescribed. Hopefully it's a hole in one. And then I believe that we see markets decline into roughly August 1st for the final bottom, the macro bottom. So this would be the exhaustion phase of the 5 waves in the Einstein model that I built. And then we would start up wave 1 in the Einstein model, and then you'd have a wave 2 down in the Einstein model into I believe it will be sometime in October, and then wave 3 up I think will be off that low. So I want to kind of show you that today and show you kind of the back testing of the VIX peak model. We are about 265 weeks away from the start of the next Great Depression window, and I believe that'll start on Labor Day of 2030, and I believe that we should see a target of about 10,350 on Labor Day of 2030, if not prior. But that's my target value. The target value for July 18th's peak I threw out there was 6250. I think we peaked out just a little bit higher, about 60-70 points higher, so not too bad of a call. The June 24th, 25th low hit correct, right? It predicted the Iran nuclear missile strike by Trump, because I predicted that I think a couple weeks or a month in advance. And then I predicted the July 18th peak weeks in advance as well. So it could be a hole in one, could be 2 spot on calls right in a row, and then we would see markets decline into August 1st again for the exhaustion wave. So we've seen like a 5 wave move up in the model. If you look at previous videos, you'll see that 5 wave move up. Again, I'm speaking in terms of my Einstein model. I'm not speaking in terms of Elliott Wave prices, anything like that. I do believe that markets move in series of 5 movements, and then have an exhaustion wave. But in my models per se, not always my work is not the same as Elliott Wave, so I'm not trying to say that any of my work is Elliott Wave. My work is not associated in any way with Elliott Wave, but I do believe in the waves and structuring of waves and things of that nature. But when I speak about waves, usually I'm speaking about number one, my Einstein model, or if I'm speaking about 5 waves, it would be the change of up versus down days in the markets on a daily or weekly or monthly scale, something like that. But I'm not speaking in terms of Elliott waves. So I know that can be, someone said that I might need to throw that out there, that I don't do any type of Elliott wave when I speak about waves. So thank you for joining me. I'll try to make it brief. So this is the VIX model. Essentially, this is my new technique that I've been doing. Obviously, when you hit a big failure like I did, missing the April bottom, don't even ask me how I did that, because I feel like a complete idiot. And I was a complete idiot. And I'll admit that throughout the whole 2025 year. I don't want anyone to think that I got that right. The model predicted the correct macro peak around February 20th. Or mid-February, I think. So we got that part right. So a lot of people you'll find in the comment section, they'll throw stones at me, and unfortunately, the people that throw stones probably should have known for themselves that with their own indicators that the markets were down 20%. They could have gone long, but they wanted to blame me. Understood. You gotta blame somebody, right? But that's why you need to follow more than one person. Hopefully I'm in the top 3 of who people follow, but I'm going to be wrong from time to time, right? So and you've got to use your own tools and speak with financial professionals, things of that nature. I've always said that. So honestly, there should be some in the crowd that were able to grab the bottom sometime in April, even though I was wrong, right? I don't control anyone, so I'm just giving it my best understanding, and my understanding is flawed at times. And obviously, I've got to build better models and better techniques to try to reduce those flaws as much as possible, things of that nature. So with that said, about my failure to properly call the bottom in mid-April, even though my models, as you could tell, go back in time and see that my models were calling out some type of low around early April, I missed it. I failed at it. But hopefully some of you were able to successfully navigate that. But today I want to show you my new technique. Basically, obviously, like I said, after you hit a huge failure in your life, you have to go back and look at your models, try to understand why the failure mode occurred. And so I found that with my models, it takes different upper limits on the graph. So you can see that the slate sawtooth Einstein model doesn't go all the way to the top of the graph, right? So I've raised the roof on or the ceiling on the graph, and it extends way beyond what the graph itself, the control settings that the graph itself stays within. The top of the graph is greatly different from that, right? So what it does is it creates a projection in the future, as with all my work. But you can see by greatly increasing the top of the graph and back testing this, properly called out the middle of April for the macro peak in the VIX, and it called out a peak in the VIX around March 11th, which was the previous bottom in the markets around March 11th. What I find interesting about this is the longer trends are the more powerful trends. So you can use the teal. It's a very short trend, right? It was created over a very short period of time, from the end of 2024 through February 2025, and it created the crash in markets into March 11th. But the major huge pop in the VIX didn't occur, obviously, until into mid-April, and that was predicted by the white trend line. That's the longer, right? That's the longest trend. And I like how the tops of the VIX model kind of all work together in kind of a more macro fashion. So it's not just a quick jolt this way or that way from the model, but it's actually 3 elongated tabletops for the crash in markets into mid-April, or the macro peak in the VIX. So I'm saying that because then you also you can look at the black trend line, which is a long trend again, and that hits 1, 2, 3, 4, you could argue 5 points into early August, roughly August 1st, I would say, plus or minus 2 business days from this model. It's not a short-term model, right? This is a macro model, so you kind of gotta give it a little more tolerance. So I went short markets on July 18th, and then I think that the VIX will hit its a major peak around August 1st. It could be August 2nd, it could be August 3rd, but my focal point really is August 1st for the macro peak in the VIX, or the bottom in the markets. And then then obviously we would go up maybe until Labor Day, maybe do another then go sideways from Labor Day into, let's say, mid or late September, and then you'd have another sell-off in markets into middle of October. Obviously I can create another video around mid-late September, try to give you more give you an updated graph of this. But you can see how the long-term trend on the green line for the VIX kind of connects with, let's say, 1, 2, you could argue that's 3, 4, 5. So the point that the green line is hitting around mid-January, it actually goes sideways for just a very small period, and then it bounces up. So you could argue that it's touching 5 points, has 5 touch points out to the VIX peak in mid-October, right? We always look for those October lows. And what's interesting about that is that would be perhaps wave 2 down, right, in my model, so to speak, on the S&P model. And then wave 3 could go off of that. So we could see a very strong market from the bottom in markets in mid-October until year end. You could see a very strong wave 3 in the Einstein model and really push markets to really high levels by the end of the year, as predicted in the previous video, using a similar technique, right? I used the same technique I showed you, I think, in the part number 9. I think this is part 10 for the Great Depression. This is in part number 9. I rolled out my new technique, and I presented that. Actually, I don't think I presented my new technique. I used the gold wave, I believe. Yeah, that's more of a traditional way that I've used to predict peaks in markets. So take that back. But I would think that the markets would then travel upwards into the peaks that were predicted in the previous video, I guess, is the statement. But yeah, so you can kind of see how I'm trying to learn from my mistakes, how I'm trying to humble myself and trying to better assess different techniques. When you build your own control chart, you kind of think, oh, the parameters have to stay the same. But as you can see, I'm finding that that's not the case. But what's very interesting is as I change the range or the amplitude, of the Einstein model, it really does sync well with future events, right? So I think that's quite extraordinary in and of itself. I think the prediction of the bottom in markets around June 23rd, 24th, or 24th, 25th was extraordinary. That it predicted a month before the Iran nuclear site missile strike occurred. The model was already predicting it. And then you saw that the markets crept up into July 18th, and then you can see here that the model's looking for a peak in the VIX around that August 1st time frame. I think the Fed speaks on the 30th, 31st. So if markets are down 7-8% by the time the Fed speaks, then that might very well be the bottom. I don't know, yeah. Anyways, you're looking for, I'm guessing, about a 7-8% drop in markets into August 1st over the next 10 days, right? So it's kind of a big call to predict that you're going to see such a sizable move just in a 2-week time span, and then go up again into mid-late September, and then we would have another crash in markets into the peak in the VIX model in mid-October. So we are, I believe we're still approaching the major Great Depression coming. I think it doesn't matter who gets in, who becomes the next Fed chair. I think in the spring of 2026. I don't think it'll matter. I think Jerome Powell already set up the Great Depression over his tenure, and I don't think there's really anything you can do to stop it, let's say. At least the timing aspect. I think what's currently going on with Congress and President Trump, I think they can limit the magnitude and the effect, the negative effect it will have on the world economy during the Great Depression window. But I believe that the Fed and the Treasury over the last decade has really cemented the Great Depression window, and I think Ben Bernanke, I think all of them kind of preset it on purpose. It's always my belief is that the Fed and the Treasury will always create the next economic collapse, and so that's my belief. That's how I got kicked out of economics class when I was in college. I believe that you could use historical data to predict the future, and so obviously I need to take that to the largest scale that I can, and so obviously that's what this next 10-year journey is, through videos of predicting the Great Depression window of 2031 through 2034. And again, I believe that the macro peak in markets would be around Labor Day of 2030 to year-end 2030. And then you'd see a horrible decline in markets into mid-late 2034. So it's not looking good. Again, I don't think we can cut enough spending. I don't think we can get debt correct enough to erase the timetable that's been preset by Jerome Powell. I don't think we can stop Jerome Powell's Great Depression from unfolding that he caused, and obviously Ben Bernanke and Yellen planted the seeds, but Jerome Powell cemented it with the ultra low interest rates and of the COVID crash of 2020, and so yeah, I think that was really poor on his part, Jerome's part, to buy into the gimmicks and then let them blow our debt sky high nationally. It really was a really good play by those who orchestrated it. They did a very good job at orchestrating the economic turmoil, and then to get interest rates so low, and then create this last decade. The Roaring 20s repeats itself, right? For those of you who love history, we're in the Roaring 20s all over again, and so we're going to see the Great Depression window ensue. And hats off to Jerome Powell for making sure that the Great Depression happens. So he will be the modern day Andrew Mellon that we saw create the Great Depression of the 1930s. Jerome Powell is the father of the Great Depression of the 2030s. So hopefully you and your families can speak with a licensed financial professional. I am not licensed in any way, shape, or form. I'm just using my models to make my predictions. So please speak with a licensed professional prior to investing, prior to making life decisions, prior to any of these things. Oh, and last word. Crypto. So remember in my Bitcoin video that I said that I expected that crypto would bottom around Father's Day of 2025, right? So I thought that the crypto market and the stock market would essentially align. And I guess that's what threw me off, right? Because I wasn't paying enough attention, or I couldn't separate the two in my mind, right? The crypto market truly did bottom at Father's Day of 2025, believe it or not, right? For those of you who love crypto more than you love the stock market, maybe you saw my Bitcoin video, you have to give the model credit, right? XRP was at a $2 mark, and now it's up to $3.5, right? So the model got it spot on, and so I think that's where I got confused, and I didn't understand how the two were disconnected, I should say, not connected. I thought they were both connected. I thought the S&P and the crypto would both bottom together, but that was not the case. And then kind of give you a teaser, I've developed a weekly version of the model you're seeing right here on your screen for the XRP, and it can predict where the macro bottoms are in markets. So a little teaser about that. I ran the bottom version of this model on XRP. It predicted that there would be a major bottom in around May or June of 2025, and then it sees another major bottom in XRP in. Again, this is just a snippet of the GoFundMe page. I didn't want you to forget that, so thank you, and please bookmark it, whatever, and watch it over the next decade or into late 2034. Thank you so much.